Good morning, everybody, and Happy New Year. Welcome to 2024, and welcome to this Tuesday, January 2nd, 2024 edition of Trading Places Live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and it's my pleasure to be with you this morning and probably for the next 30 minutes or so we can kind of take a look at the action, how we finished 2023. I'm going to spend a lot of the time just looking at 2023. And going back and maybe taking a walk down memory lane because it is now in our past. I don't think it was the year that most were expecting at the beginning of the year. Remember, we were down near those cyclical bear market lows. The NASDAQ was about to break down again. We saw a little bit more of a rally in the S&P 500 in the fourth quarter of 2022. But when we started 2023, it was not looking very good, if you recall. I maintained my bullish stance. Not only that, but I'm going to show you at the end of the show the chart that I showed everyone at Market Vision 2023 and how I thought the S&P 500 would unfold throughout the year. And then we'll take a look at the real chart. And I think you might be amazed. I'm still a little bit amazed when I look at it. But I think it's a combination of a lot of things, doing homework, using perspective, maybe getting a little lucky. All those things combined. But turned out 2023 was a pretty darn good year for anyone who, I guess, maybe had the stomach to be long going into the year, which many of our Earnings Beats members, I believe, did. We had a great year. I know personally it was a good year. I think it was a really good year for a lot of our members. So again, thanks to everybody for your support throughout 2023. But now we got another year ahead of us. I feel like, it's kind of like a professional sports franchise. It doesn't matter if you won the Super Bowl last year. We're starting a new year. What do you got this year? How are you gonna outperform this year? How are you gonna make it back to the Super Bowl? And that's what this first month, January, is going to be all about, trying to go through and decipher the real news and the real truth from all the noise. And we know how much noise is out there. So that's going to be the goal every day here on this show and at earningsbeats.com in general, is just to try and sift through all the noise and all the fears and some, a lot of the greed. Now that we've had a big year, now you're going to see folks maybe piling on the long side. So we got to deal with that too. Got to deal with everything. Anyway, 2023 was great. I finished it personally down in Florida, at least right up close to New Year's. Went down for about a week. We typically do that the last week of the year between Christmas and New Year's. Weather wasn't that great, although it was probably better than maybe many parts of the country, but it was still, for Florida, pretty chilly. Highs in the 60s, not the 70s, and maybe even into the 80s that I like to see when I'm down there. But didn't get any golf in, unfortunately. But it was still a good trip, good to get away. I hope everybody was able to recharge over the holidays, spend some time with family, friends, and now it's time to get back into gear and get things going. So let me get things ready here. Taking a look at what happened, usually I take a look at what happened the prior day, but honestly, last week between Christmas and New Year, volume is very weak. It's very low. We tend to have a very bullish move. When I say very bullish, not like it takes off, but it's generally higher almost every day. And it kind of is boring action. And that's a little bit what we saw last week. But anyway, the way I have set the charts up here on this candle glance is I've got a weekly chart of the major indices and a weekly chart of the 6 best sectors in 2023. So we're going to take a 1-year weekly look at the major indices that I normally look at, and then the top 6 sectors for the year. And the top is the PPO. So that's the weekly PPO as we go into a new year. Then we've got the price action. And then down here at the bottom, it's price performance. So it just tells you over the course of this past year what the percentage gains were in each of these various indexes or sectors. So let's start off. Dow Jones. Dow Jones on Friday went up another 303 points. But look at the year. PPO, weekly PPO, couldn't be much stronger. Coming up from just below the zero level. Remember, we had that correction that ended in October. That took us just beneath the zero line, and now the Dow has come roaring back. Price action, you can see fourth quarter was very strong, pretty much across the board. And then there is your year-to-date price performance. So for the last year, the Dow Jones was up 13.7%. S&P 500, PPO great, price action great, 24.23% was the S&P 500. By the way, a year ago at Market Vision 2023, I said S&P 500 would go up 23%. That was my target. It went up 24.23%, pretty close. NASDAQ 100, you can see, was up 48 on Friday. Huge advance, but 53.81% for the year. So if you were bearish going into 2023, that's a big gain to give up. And one of the things I said last year, back in June, when I called the bottom, I actually did an article and I showed the returns that you get the first 1 to 2 years after a cyclical or a secular bear market ends. And the gains are astronomical. I mean, if you can't participate, or if you don't participate in these big advances, it is a massive, massive difference in where you're going to be when you retire, or whatever you're saving for, whatever you have your money in the market for. It's going to make it a much more difficult path to get there if you're not in during these moves. And I remember one comment on, I think it was on my June market bottom YouTube video last year. And someone came in and said, what's the point of trying to call the bottom? And I was, at the time, I'm like, what do you mean? What's the point of trying? If you can call the bottom, you're going to have massive gains that you can benefit from. What do you mean? What's the point in calling the bottom? I still don't understand that comment. Hopefully today, that same person, if they look back, will understand the point in calling the bottom. Because once you see that there's a lot more risk in the market to be short, a lot more risk to be short than there is to be long. Once you understand that from a long-term perspective, you go in, you get in, because you don't want to miss these moves. I don't know how else to state it. These are some big gains coming off the bottom. Like I said, the NASDAQ up over 50%, almost 54% in 2023. Mid caps up 14.45%. IWM, small cap, Russell 2000, up almost 17%. I mean, a lot of people saying, what's wrong with the small caps and all? Well, they came roaring back at the end of the year, up 17% for the year. Not bad. Transports up 19% for the year. Everything was participating by the end of the year. Looking at the best sectors, technology, no surprise there with the NASDAQ so strong. Technology up 56% in 2023. Communication services, 53%. Consumer discretionary, almost 40%. If you follow me at Earnings Beats and you followed me for a while, you know which three sectors are the big ones that we want to lead the market. Technology, communication services, and discretionary. Maybe not quite in that order. I'd maybe rather see discretionary over communication services. But hey, I'm not going to, get too upset by what I'm seeing here. Fourth spot, another aggressive group, industrials, gaining 18% for the year. Top four groups were all aggressive areas. The only one that's not in the top six was financials, and financials were just a little bit behind real estate in the seventh spot. Anyway, materials and real estate both gaining ground, up 12.5%, and real estate up almost about close to the same, 12.36%. So I don't know how the market could have set up any better, quite honestly. We had our signals to be in 2022, and then we had an explosion in all the key areas that we like to see the market perform best in during 2023. So I've been going into 2024. I mean, I'm not ready to make my call. I'll be doing that this Saturday. But, I mean, certainly going into the year, we look like we're in pretty good shape. Now, I will mention futures are down this morning. So to open the year, we'll see whether or not how we kick off not just the open, but how we finish today, and then the balance of the week. But currently, we do have the Dow Jones futures down 223 points, S&P 500 futures down 37, NASDAQ futures down 171, which is about 1%. Last time I looked, I think small caps were down about 0.5%. That was probably 20 minutes ago. Crude oil prices up about 1.6%, back close to $73 a barrel. And we've got the U.S. 10-year Treasury yield up 10 basis points this morning, back to 3.96%. And we're going to look at that right now. Or actually, we're going to look at that in just a minute. Before we get into the 10-year Treasury yield, I want to show you the top 12 industry groups. Probably won't be shockers here. This is for the entire year of 2023. Semiconductors up 95%. Travel and tourism, 87.5%. Internet, 80%. Are you listening to these numbers? I mean, we're talking 95%, 87.5%, 80%. Home builders, 78%. Autos, 77%. Recreational services, 74%. Broadline retail, 64%. Software, 59%. Computer hardware, 47%. Industrial suppliers, 46%. And then we got publishers, 41.5%. And tires, 41%. Those are your top 12. Where do they come from? Technology, communication services, and discretionary. Almost every one. Actually, one industrial. I think all the others, as I look across, all the others come from discretionary, communication services, and technology. We had one industrial that made the list of the top 12. There's your dozen leaders in 2023. What is wrong with that leadership? Somebody tell me. I mean, that's the way it was most of the year. We might have gotten industrial suppliers in there in the fourth quarter because they really strengthened in the last 2.5 months. But for the most part, these are groups that led throughout much of 2023. I would say maybe one that didn't was, when we went through the correction, home builders got hit a little bit. Remember, interest rates got up to 5%. Now we got interest rates back down below 4%. They took off in the fourth, or home builders took off in the fourth quarter. But those are areas that I would want to lead the market. This doesn't give me any bearish feelings at all, other than being overbought. And if you think overbought is a bad thing, you need to go back and study secular bull markets. When they go up, they wait for no one. So I'd be a little careful saying, people have been saying that all year too. Overbought. NASDAQ was overbought back in January. It was overbought in April, May. It was overbought all, throughout the year. Outside of the correction, though, the NASDAQ was pretty much straight up. And you can see a lot of the groups participating. Anyway, 10-year Treasury yield. Let's take a look at that. So this is the latest. 39.56%. Excuse me, 3.96%. I'm sitting here thinking in the back of my head about this. I think what I'm going to do, we'll keep everything the same. The show starting at 9 a.m. I think I'll just go ahead and hook up to my iPhone and just use that as my internet. That shouldn't have any problems after, if I do that. So we'll probably go ahead and just keep it the way it is for now, unless we have some other issues. Anyway, 10-year Treasury yield, 3.96%. That is up 9 basis points, but still below the 20-day. We're still in this downtrend. Maybe on the next move to the downside, maybe this PPO will print a higher low. So maybe we go down one more time with yields. We got a big jobs report coming up on Friday. And then maybe we get a positive divergence, and that gives us an opportunity maybe to go back up to about 4.25, maybe 4.30. But I would say that 20-day EMA holds as resistance. I think that's the most likely scenario. It's not guaranteed. We use technical analysis to give us, to assess risk. That's what I use it for. I use it to assess and manage risk. And so when I look at a chart like this, I'm thinking 20-day EMA is going to hold as resistance. May not. Maybe it keeps going through, and I'll have to adjust if it does. But that's my thinking, is that it's going to hit the 20-day, maybe somewhere around 4%, and then we'll probably move back down again. S&P 500, So this is the daily chart for 2023. So it's a 1-year chart. I mean, yes, overbought. Look at the AD line. AD line strong. Price action strong. Really not a whole lot to say bearishly. NASDAQ 100, price action strong. AD line strong. I mean, I've been going over this. So I don't want to spend too much time going over the same thing. The end of last week, we did see a little weakness, a little bit more weakness in the small caps. I would love to see 195, 196. I mean, we got the 20-day moving average, got some gap support, top of gap support. I think that 195, 196 area, if you're thinking about leveraged ETF, that would be an area to maybe take a shot. And I'm not talking about going all in. Please be careful with leveraged ETFs. They are extremely risky. And I know sometimes folks, they get in and the pulls back and you say, well, I'll just stick with it a little longer. Next thing you know, you got a big loss. So I trade these very cautiously. I think that's probably the best word. I love leverage, but I only like it when it's on my terms. I don't like it when I'm chasing the market. I know some of you probably have been in the TNA throughout much of this rise. And if you have, you've done incredibly well. Congratulations. But just understand you took a lot of risk to do it. And the same thing holds on a pullback. If we get to a key support level, I will probably be putting some of my money into the TNA. Small percentage, not going crazy, because all I'm trying to do is boost my returns. I'm not trying to, retire in 3 weeks. I just want to try and boost my return. That's the way I use it. So I might get, if we get down to 195, 196, or even approaching that area, I'll probably start nibbling on the TNA. But if we close below the 20-day, the TNA will be out. I will take no chances until we're back up above that 20-day moving average. I don't want to go down 3-to-1 on a 3-to-1 ratio on any of my position. So anyway, I like to talk about leverage, but I'm kind of careful about it because I get emails and I've had folks that have written into me in the past say, when we were in that downtrend, talking about they've got a big loss in the TNA, and that's not the way I don't like to trade it and hold it during downtrends like that. If my support doesn't hold, I get out. So just got to be careful with anytime you use leverage, and always, always, always buy or sell leverage based on the underlying index. You don't notice I don't pull up the TNA chart to try to decide where I'm getting in or where I'm getting out. I use the IWM chart because the TNA is set to follow the IWM. And if you look over time, the TNA loses ground. Let me show you. Look at the IWM here, taking out the July high. Let's pull up the TNA here. You see the TNA? It basically just gets up and tests the July high. Again, here, IWM, way above the July high. I mean, that was at 197. We got up to 206. TNA should be smoking through, and it doesn't. There's erosion over time. It's the volatility up and down. It's the compounding nature. There's all of these different things in play. But if you want to trade a leveraged ETF, always look at the underlying index for entry and exit. Don't look at the TNA or the leveraged ETF. Just a tip that I'm going to throw out there. I've talked about it plenty of times before, but I like to mention it for anyone new watching the show. All right, transports. Transports, maybe we're starting to roll over a little bit. We'll see. I would still expect really strong support down around 15.7, 15.750. Well, maybe we get down there today. Obviously, futures are weak. We'll see what happens. Okay, let's move on to the chart of the day. And I do want to mention your 30-day no-cost trial, $0. You do have to give a credit card. We have to get you in our system, which requires the credit card. But we will not charge you until your 30-day trial is up. And we'll send you an email to remind you. Where it's not like we're hoping that you just forget about it. We don't want you as a member if you don't like our service. So anyway, check out that no-cost trial. It's a new year. This should be a New Year's resolution. If you're not already a member at Earnings Beats, give us a try. I'm telling you, our members are not unhappy at all based on what we've been providing, information we've been providing, all the research that we provide over the course of the past several years has come in so handy in some volatile markets. So anyway, check that out. Also, Market Vision 2024 coming up on Saturday. Click that register now button. It'll take you right over. Talk about all the different things that we're going to be discussing. There's the agenda for the day. Notice there's Grace and Rose coming in the middle of the day to talk. I'm going to give 3 different sessions talking about different things, taking a look at bull and bear markets. What separates them? How do you figure out what is, when are we going into a bull market? When are we going into a bear market? Everybody calls them after they're over. Yep, we're down 20%. It's a bear market. Well, that does you no good. You need to know before you start moving down, or at least you need to see the warning signs so that when you start to go lower, that's your confirmation. Get the heck out. Presidential election year cycle. Got a lot of folks talking about the presidential election coming up this year. I'm going to give you the numbers. Not my opinion. I'm going to give you facts about that particular year, every 4 years. Anyway, that's going to be at 11 o'clock on Saturday morning. Then Grayson will come in, talk about the evolution of stock charts, the new Sharp Charts platform, how he uses it, the great features. You want to check that out. And then finally, going to wrap up the show with my 2024 forecast, giving you a lot of the puzzle pieces that I look at, helping you to kind of figure out on your own how to read the market. Don't listen to CNBC. I know some of you say, you don't need to keep. Yes, I do. I need to keep talking about this because we're getting new people in to listen every single day. And I need to beat this like a dead horse. I mean, this is CNBC and the fact that the financial firms have market making operations. They trade for their own accounts. They trade for their wealthy clients, the pension funds, everything else. And then they get to take some of their people and put them on CNBC, and they're like puppets. I need to talk about that because it's the biggest conflict of interest of anything I can think in my life is the way Wall Street's set up. And you know what? It's a system we have, and it's a system we have to work with and work around. So we need to talk about this, and we need to talk about it a lot because Wall Street doesn't care about you. I'm telling you. If you're one of their wealthy clients, they might care about you, but they care about their own pockets a lot more than they care about your pockets. And if that hasn't been shown true over the last couple of years, and you don't understand that by now, I don't know what else to say, but I'm going to keep talking about it. Anyway, Market Vision 2024, you don't want to miss this one. All right, chart of the day. So on Saturday or Friday, I think I wrote an article over at Stock Charts, and I talked about 2 stocks. I remember 3M was one of them. And Citigroup was the other one. They haven't really been great performers, certainly not relative performers, and they're starting to show more relative strength, and their absolute charts are looking better going into 2024. Those 2 stocks, I think, could have a turnaround. Here's another one, Zebra Technologies. Now, I love this candle right here in mid-December. Beautiful, big volume. That's pretty close to a Maribozu candle, if you're familiar with candlesticks, where you have a big hollow candle. You open at or near the low and you close at or near the high, and it comes on heavy volume. That is just buying, and more buying throughout the day. That is tremendous accumulation that takes place on these kinds of candles. So I love the fact that it's broken this downtrend on the daily chart and moving higher. But let's move to the weekly chart. Weekly chart. Look at this. Back through the 20. Here was the PPO moving down. It really should have stopped at the 20, and it didn't. It kept going higher. And then let's take a look at the monthly chart. This is a great stock long-term. And so when I try to call bottoms in stocks, I like to at least have the knowledge that these are stocks that historically have done extremely well. I mean, from 2016 bottom at 50, this stock went through 600 in 2021. We're talking 5.5 years, and the stock was up 12 times. So this is a good stock, and it went through the correction. Didn't really participate this year in 2023, but looking at that long-term track record, don't be shocked to see this one begin to make a move to the upside. And I think we're already starting to see that on the daily chart. Look at the AD line right here, breaking out to new highs. I mean, when we started going down, the AD line was still going up. Through the balance of the correction, we went down a little bit. And then as we started to move back up, we quickly went to a new high. I think there's a lot of accumulation taking place on Wall Street, and this is a stock that could be a big winner in 2024. And yet we'll follow it the way we always follow it with technicals. But I'm just saying, when you look at the long-term chart, you see a stock that has a great long-term track record, went through a pretty significant correction, and is now starting to show some bullish signs. This is a stock that could do well in 2024. At least keep it on a watch list. All right, just the last couple of things here real quick. I told you I would talk about the prediction I made last year. This is the actual chart that I gave back at the beginning of 2023. The action was as of early January. I think it was Saturday, January 7th that I gave the talk. So this would have been as of Friday, January 6th close. And I drew the lines on how I thought maybe this year could go. I thought we'd have a strong January. I thought the balance of the first quarter would be weak. And then I thought, okay, then we're going to have a big rally back during the summer. Then we'd have one more pullback late in the summer. And then look at what I predicted in the fourth quarter. Straight up, 4,100 to 4,700. That's in the fourth quarter. Now, if I pull up the S&P 500, actually, let's see if I have it over here. Okay, I've got it here. So this is the weekly chart. Well, how many years did I go back there? That was pretty big. Let's make this a bigger chart so that we can see it. All right. So here we were. This was the move. And now look what happened. Up move in January, down move into March, move up through the summer, back down late summer. Remember, July through September, not a good period for the market. There we went down, and look at the fourth quarter. Now, again, this is what I drew out 1 year ago. I mean, not only did I give a good target at the end of the year, 4,700, we finished 4,769, but I mean, that is eerily accurate. And yeah, I'm patting myself on the back because this was going into a year where just about everybody you talked to said the market was going to keep going lower, that we were going to crash. And so not only did I give you an accurate forecast, also laid out almost exactly the way the market was going to play out during the year. I'm going to try for the fifth year. Is this the fifth year? Let's see, we did 20, 21, 22, 23. Yeah, so we've done 4 Market Vision events. All 4 of them, by the way, the forecasts have been phenomenal. I'm going to try for number 5 this Saturday. You don't want to miss it. All right, that is it for me. Let's take a look, see how we're opening today. And we're opening like futures suggested we would, down. We got the Dow down about 0.25%, S&P down 0.5%, NASDAQ down 1%. We got small caps down about 2/3%, mid caps down 1/3%, pretty much red across the board. And we have a VIX, which has jumped 11% today, up close to 14. And I'll be talking about the VIX on Saturday as well, some of the things to look for and how the VIX is going to impact 2024. Anyway, great event coming up. Don't forget Thursday's event as well, because Thursday is the January effect. What happens in January? You say what happens in Vegas stays in Vegas. Well, what happens in January is massive to the rest of the year. All right, I just kind of made up the rest of that line. But what happens in January is really important. Join me on Thursday. All it takes is a free trial. You do have to be a member. It's not asking too much. Try our service. You don't have to pay a thing. Come on in. You'll love this presentation on Thursday. Have a great day, everybody. Again, Happy New Year. Looking forward to a great 2024 for everybody. Wishing you great health, happiness, and a prosperous 2024. Happy trading, everybody.